Well, thanks everybody for joining. I truly, truly appreciate it. I think this is a really fun topic. When I talk to entrepreneurs, they, typically have, one view into starting a company, which is I'm going to start a business. I have an idea. I'm going to solve this really painful problem. I'm going to bring something new into the world. And so many don't understand you can also buy a business, specifically a software company or a SaaS business. And I think that's such a great path. So I'm going to talk more about that today, whether you're thinking about jumping into entrepreneurship, maybe you already own a company and you're looking to grow that through acquisitions. Maybe you're exploring either or buying a company or starting a company. This is a great topic because I'm obviously a little biased. We help startups get acquired. So I think, buying is actually a great path for entrepreneurs and they should be considering that more than they do. So let's go ahead and let's get started here. Okay. And if you have questions during this, definitely, feel free to put them in the chat. I'll answer them after this presentation. I have some other questions that we'll be going over as well. But without further ado, entrepreneurship through acquisition, why buy rather than build? So as a quick agenda, we're going to be doing some brief introductions, talking about the race for returns. What's the difference between when you build your own business from scratch or, when you start one, or excuse me, when you buy one, how to harness your passion when looking at acquisitions, turnkey entrepreneurship, and then how to choose a business to acquire. And then at the end, I also have some great case studies and stories from other entrepreneurs we've worked with at Acquire to acquire small businesses, large businesses. They're a private equity firm. They're a holding company. They're just an individual looking to, escape the 9 to 5 and everything in between. So those are some really great stories. A little bit about myself. My name is Andrew Gazdecki. I am the CEO and founder of Acquire.com. I previously founded 2 different startups. Well, actually probably 10 different startups. Been an entrepreneur as long as I can remember. I was that kid selling baseball cards in elementary school, but eventually I started a company called Business Apps. It was a drag and drop, do yourself mobile app builder, bootstrapped that business to about 10 million in recurring revenue, and sold that to a private equity firm. And then I later started a company called Allcoin, which was acquired by a strategic buyer, Bank to the Future. And at my first company, we were named to Inc. 500's fastest growing company 2 years in a row. And then I somehow made it on the Inc. magazine 30 under 30, which made my mom really proud. And at Acquire.com, we're building the world's most founder-friendly startup acquisition marketplace in the world. And in terms of our impact, we've been in business about 4 years. We've helped 1,000 plus businesses get acquired. We've transacted over $500 million in closed transactions. We have over 500,000 registered buyers on the platform. And today alone, we have thousands of businesses listed, totaling over 1 billion in combined revenue. And as you've probably seen from just the webinar group as well, we're a truly global company. So we've served over 100 different countries, pretty much on every single continent. We've done acquisitions, and as I like to say, we're just getting started. So diving into why you're all here. So entrepreneurship through acquisition. What's the difference? So one way I like to position this is, when you're starting out, both are going to be dramatically different. So when you're building a company, your goal is typically to innovate. You want to start at zero. You have a business idea. You have a startup idea. You want to bring something new to the market. So you're creating your own market. You're developing the business from scratch. You're growing through iteration. And you're essentially, bringing something new into the world. Not all the time, but generally most of the time. And these are really different types of entrepreneurs. So on the left, you can kind of think of it as the 0 to 1 entrepreneur where, the skill set is kind of this interesting creative mix of how do you get your first customers? How do you figure out what the product exactly looks like? How do you position the business? What is it called? Like you're literally thinking of everything. And it's a lot of fun. I've done both. But then on the right-hand side, this is where you're, growing a business. You're potentially buying one. This is where your goal is to accelerate. There's already a foundation. There's already some customers. There's a product in place. There's probably some feedback as well on how to make things better as well. So there's a lot to work with. And you're looking to expand into existing markets. You're looking to maximize the current assets. You're essentially scaling the business by looking at things that have already been proven, things that are working. Again, customers are happy with the business. How do you get more of them? How do you expand the current market that you're in? So you can consider this like the 1 to 10 phase. You know how there's, builders and there's scalers. That's kind of how I like to think about these two groups. And so if you're a builder, then, starting a business is probably the right path for you. You want to build your own startup. You want to bring something new into the world. But if you're more focused on, scaling businesses, maybe you have a background in sales or marketing, or maybe you just want to skip into something with, existing momentum, existing customers, at least a foundation to build upon. This is where I think, buying a business can, really, really be a better fit for these types of entrepreneurs. So really just, putting these into two buckets, I think is important. And then this is what I like to call the acquisition head start. So when you're buying a business, yes, you're buying a business, but what I like to think is you're really buying product market fit. So what that means is you're able to skip over essentially the hardest parts when you're building a startup. This is going to be at the very beginning. You're scratching and clawing for those first customers. You're trying to figure out, a product or service that your customer is going to pay for, is going to renew if it's a SaaS business. They aren't going to cancel. How can you essentially do that, from nothing? And that process is very, very difficult. I've done it several times. It's also a lot of fun, but it's a different skill set. And it's also, there's a lot of ambiguity. It's typically higher risk. This is where a lot of startups, typically never escape, is they launch, they experiment, they never really find product market fit, and they end up, closing up shop. And when you look at something like that, it's like, how can you skip over essentially the hardest part of building a company? And that's where entrepreneurship through acquisition comes into play, where you're essentially able to, buy a business from another entrepreneur where maybe they're great at the 0 to 1 phase. They're really good at building products. They don't have any interest in scaling a business or optimizing a business, or maybe it just gets boring once it becomes a quote unquote lifestyle business where, it's maybe going to generate couple 100,000 revenue a year, a couple million. And maybe their goal was to build a multi-billion-dollar business. And once that becomes pretty obvious that's not going to happen, you can actually buy those businesses and scale them up or stabilize them or whatever, your goals are. But again, you're able to start with this head start by, buying a business, skipping over essentially the hardest years of, building a company, and acquire a business with an existing, market fit, existing customer base, allowing you to really just start at the point where, you can focus on scaling, expansion, improving the business, making it more profitable, focusing on efficiencies, just so many different things that you're going to be focused on when you buy a business versus when you build a business from scratch. And really, this allows you to harness your passions as well. Just thinking, what gets you excited? This is where we look at those two buckets again versus building a company or acquiring a company. So if you like, full creative control, you like to learn through mistakes, minimal upfront costs, experiment and iterate, being able to build unique solutions, flexible work structure, start at your own pace, take full ownership. This is building a company in a nutshell. This is where you get to decide essentially everything. You can be an extremely creative person. It doesn't require a lot of capital up front. You're going to be experimenting quite a bit because, again, you're trying to figure out what is the product market fit. What is the solution that you're going to be offering to customers? How are you going to offer it to customers? Where are you going to find those customers? How do you price it? Literally everything in between that. But then when you're acquiring a company, that's when you're able to obtain a proven business model, revenue from day one. You can scale with existing resources. So this means there's revenue coming into the business, which allows you to allocate those resources to further grow the business, which means you can improve the product. You could hire different people. You can invest into marketing, whatever it may be. You have resources from day one typically to reinvest that. You can skip the early risks, like I was just outlining, the period where you're literally trying to figure out how do you make money. You're able to skip over that point because sometimes it takes 1 to 3 years. Sometimes it takes 10 years. Sometimes you never get past it. So you're able to skip that extremely risky stage. So you can begin working with an established customer base. You can focus on growth. The team could already be built in. And this allows you a faster time to market, essentially. So instead of spending the first 1 to 2, 3 years, again, finding, your revenue model, you jump straight to the point where things are starting to work, or maybe they're completely working, and you can begin to optimize at that critical point. So again, two different styles. It's 0 to 1 versus, 1 to 10. Are you a builder or are you a scaler? Two different styles of entrepreneurship, in my opinion. Some entrepreneurs can be good at both. Some can be really good at starting and then also scaling. But typically, more often than not, you'll see entrepreneurs falling into two, or at least you will be more excited either building a company as opposed to scaling a company. And then turnkey entrepreneurship. So, what are you acquiring when you find a great business that is going to be a fit here? So, number one, product market fit. This is where customers, again, are happy with the product. They're purchasing the product repeatedly. They're telling other people about the product. This is the hardest thing to build in a company. And you have the opportunity to acquire this, where you can, again, build upon this to take the company farther than it was able to go in the past. Intellectual property, so all of the items in the company that make it valuable have already been built out. The software, the front end website, the marketing items, everything that's being used to acquire customers or service customers, all that's already been put in place. And then customers as well, which is revenue. A team could also be put in place. You could have someone available to work on the product or answer customer support questions or help you market the business. Partners and vendors as well, such as maybe the hosting company, maybe the email marketing platform that you're using, the CRM, everything needed to essentially run the business. And then a competitive advantage as well. So what is it about this company that has customers choosing this company over the others in its space? There's already been a defined strategy of how do you win customers? Because if they didn't have that, they probably wouldn't be getting any customers at all. Maybe they're the cheapest. Maybe they have the best brand. Maybe the product is just exceptional. There's already an advantage in place that gives you a lot of just data points on how to make this business even better when you acquire it with all these things in place. Okay, so now what to look for when acquiring. So we've gone over who does this kind of make sense for? Why should you be considering this? Quick recap on that is you like to start at a point where there's a good foundation in place. You have customers, you have a working product, and it's really a great opportunity to scale the business. So what do you look for when you're acquiring these types of businesses? So you're going to go through something called due diligence. This is where you're going to be reviewing the business to see if it's a great acquisition, if there's anything wrong with the business, what are the red flags. So right at the top, we're going to be going over the finances. We're going to be looking, how is revenue trending? Is there a net revenue retention number that shows you customers are repeating their purchases? So they're not instantly canceling. They're not voting with their dollars that this is a low quality product. Is the business profitable? These are all great things to look at. There's a number of different things you can look at, especially for SaaS businesses. How is the churn each month? What is the lifetime value of the customers? How much are you spending on marketing? What is the customer acquisition cost for different customers by channel? But typically from a high level, when you're looking at SaaS businesses, is the revenue growing? How is cancellations? What is the retention rate? And is the business profitable? That alone will give you a pretty good view into essentially, is this a good acquisition opportunity? And then operations. So this is when the business is probably at least a couple 100,000 in revenue. You're going to have some sort of documented processes. How do they do customer support? How does marketing work? How does, the product interface with any integrations they have? If you're looking at a business, you don't have these in place, maybe you're looking to sell a business, definitely start documenting now because they add so much value to a new buyer. And if you're a buyer and these aren't in place, you can always ask for these to be put together if they aren't already as well. But you want to look at how efficient are things? Do they have a central area for support tickets to go into? Is there an automated help desk system? Do they have, video tutorials for customers? Everything that basically delivers the product to customers and allows them to access the product. What does that process look like? How quickly can you step into the role of the existing founder and essentially, buy the business, then grow the business? Because that's what you're going to be looking to do is you want to make the business more efficient so you can ideally scale it and then you can see a good return on your investment. So can you wrap your head around how the whole business works easily, or is there a lot of information that the owner still has and you're going to need that documented? And if so, you're going to want to document all that. And then, definitely look at things like support tickets. What are customers saying? What are common complaints? Where are people getting stuck? That's going to be a role that, I do customer support quite a bit, and so does any founder. And so that's something you're going to want to Definitely understand that this is an area that you're probably going to have to work. So is there a ton of customer support tickets? Who's answering them right now? And again, what are customers saying? Now, moving over to product and technology, some things I always like to see is low maintenance. Is there a lot of bugs? Is there a lot of work being done each month? How does the product, what does it need to be essentially maintained? If there's a high maintenance cost, meaning every month, different, things need to be fixed or things are breaking, those might be some red flags that, might point to some larger issues. When you look at the code base, is it documented? Is there um, things that just aren't put together well that are probably going to need to be fixed? Is it slow? Is it fast? These are really, if this is a SaaS business, this is going to be the core product that you're acquiring. So this is, arguably the most critical aspect. Can you understand? Are you an engineer? So are you able to, step into the code base and wrap your head around it? Or is there a ton of issues that make it really, really confusing? And if you acquire the business, who is going to be updating this code base? Are you going to be adding additional features? If so, being able to understand how things work together is going to be critical. And then ideally, you're going to want to see few external dependencies. If there's a lot of integrations with other tools or things that just are required to make the product work, it's going to be a more complex acquisition. So understanding what that's going to look like post acquisition is also critical. And then the people. So if you're looking to acquire a larger size business where there's existing employees, there's an existing team, this brings on a whole different array of things to consider. For example, are employee reviews being conducted? Are there HR records for the team? Who is staying on? Who are the key employees? Is there a key engineer, a key person in sales? Is there a key person in marketing or leadership? Just having these conversations upfront can be massive, because if there is a full team in place, they're going to have a lot of questions when the business is acquired and wondering, what's going to happen to their, role. Are things changing? Are they going to be motivated to stay? Are they going to, have a big windfall from the acquisition and maybe they want to move on to something else? Whatever it may be, just understanding who can you expect to stay on? How do you motivate these individuals? What is their role within the company? And then last, we have culture here. So understanding, what is the existing culture of the business? How much is that going to change once the existing founder, owner, entrepreneur leaves the business? How can you, retain that culture as much as possible? Are great questions to ask, because you don't want to go into a business without, knowing what the expectations are for the existing team previously, and then having it dramatically change. And then everyone decides to leave or something like that, which would be less than ideal. And then sales and marketing, understanding just how do you acquire customers? What are the biggest channels, biggest customer acquisition channels? Is it, paid? Is it social? Is it organic? Is it a mixture of all these different channels? Also understanding who set up these marketing channels and these sales channels. Is there an agency that they're working with? Is there an individual that leads sales or an individual that leads marketing? So just wrapping your head around, how do you acquire customers? How efficient is that? How much does it cost to acquire a customer? And then also understand the growth opportunities. What's missing? Maybe they've tried some things in the past that don't work, or maybe they weren't able to get them to work. Those could be big opportunities for you to potentially correct and help grow the business even further. And then also looking at things like the brand, the total addressable market, and then the positioning of the business. What makes it unique? Why are customers choosing this business? How is it positioned in the market for customers compared to other competitors? All that fun stuff. All right, now going over some case studies. So these are real entrepreneurs that we've worked with at acquire.com to acquire different businesses for different reasons with different goals. So just to give you an idea of, the possibilities when looking to acquire a business. So this is Syed Balkai. He has a private holding company. He acquired a company called Awesome Motive, or excuse me, his holding company is called Awesome Motive, and he acquired a company called Push Engage. And what he's done is he's essentially built a empire of WordPress type businesses, and he does a lot of it through acquisitions. And he acquired Push Engage to help website owners grow their traffic and sales with push notifications. So maybe you're looking to start a holding company. You want to acquire more than one SaaS business, and you want to have those businesses all working together potentially. Maybe you're looking to, do something like this for Shopify apps or something, where you can acquire multiple different Shopify brands that are all serving the same customer. There's a number of different entrepreneurs that do this. I believe Syed's companies in total generate over 100 million in revenue. He's obviously been at this for a very, very long time and is a very successful entrepreneur. But a key part of his strategy is acquisitions. It's not building new products. He does that as well, but he also will acquire businesses that give value to his existing customers to, be able to offer different products and services to these customers. Another one is Ryan Culp. He is the founder of a firm called Fork Equity. His background is in entrepreneurship. He's done about 10 acquisitions at this point. We also have a really great course that we actually acquired from Ryan about entrepreneurship through acquisition, essentially micro private equity, where what he does is he essentially will, acquire these small SaaS businesses with a low revenue threshold, and then he focuses on growing those businesses. They don't have any sort of synergies, meaning they don't have the same customer profile. They're all pretty different. Get Reviews is one that he acquired about 2 years ago. He also had a business called FOMO, which is a platform that essentially has a pop-up and tells you, hey, Andrew was on this website and bought something. And he grew that to a couple million in revenue. When he bought it, it only had, I think, 10 or 20,000 in revenue. So again, a very successful entrepreneur who has built his success almost entirely through acquisitions. What I love about what Ryan does is he has a great knack for growing different businesses. So when he acquires these companies, they typically have revenue on the lower side, and he's really good at, he just needs a working product, some existing customers, and he's able to scale those up very efficiently. So it's been awesome seeing Ryan be successful. Another one is Joe Spicer. He is a partner at Hampton VC and also has a new company called Hampton, where basically it's an invite-only group for entrepreneurs. But before that, he was actually buying a number of different companies as well, where he would essentially work to flip these businesses, and he got really good at them. He bought and sold a number of different companies on acquire.com. He had a great Twitter thread here: the most practical way to make $1 million, buy a SaaS business and flip it for 4 times in 12 months. He actually did do this multiple times, and he would sell them very fast on acquire.com. And he'd also buy really, really great businesses. So he wrote about this as well. We could probably look up this thread if anyone's interested. My exact 5-step blueprint on flipping SaaS businesses for millions. And I can confirm he actually did that because I got to see it firsthand. But essentially what he would do is something very similar to Ryan, where he would buy these individual SaaS businesses that maybe had one customer acquisition channel stood up, and then he'd look to add another customer acquisition channel or double down on the one that was working and then scale up the business. So the product had just enough traction to show that it was a good product. The customer was defined. The positioning in the marketplace was also defined. And then from there, it was just, how do we pour gasoline on this as quickly as possible? Maybe the original owner was an engineer. Maybe they didn't have a background in sales and marketing. It's a very common story. And so Joe is able to step in and buy some of these SaaS businesses pretty quickly and scale them up. And he would later sell them quickly. Some entrepreneurs will hold them for a long period of time. Some will hold them for indefinitely. Some will hold them for 3, 4, 5 years. Joe's strategy was to flip these in, less than a year, which is, it's a lot of work to do it. But again, showing you, we have Syed, who has a holding company where he's not selling the businesses. He's looking to build an empire that compounds over decades, playing a different game. Very, very successful entrepreneur. Ryan, who I just went over, he has a different approach where he will buy businesses, grow them for a couple years. He'll grow them to a certain revenue mark and then sell them over a couple years. Joe is buying businesses and then selling them within 12 months. Dirk Salmer right here, he works at a private equity firm called SaaS Group. This firm essentially buys pretty large bootstrap SaaS businesses. So if you want to have a private equity firm where you're looking to buy some pretty good sized SaaS businesses, obviously acquisitions is how you do that. They look at product-led businesses where there's not necessarily a sales team required. Customers can see immediate value when they sign up, use the product, and then upgrade and begin paying for that product or service pretty quickly. And then another individual, Eyal Toledano. He's the founder and operator at Micro Angel. What I love about Eyal's story is he's bought a number of different businesses, and they're all Shopify SaaS apps. And he has a private holding company where he's acquired a few businesses. And he essentially said, hey, I want to be, I want to have a private holding company. I want to take around 500K and I want to turn it into 1.4 million. And he's really done it. This article at the bottom here was written in 2021. He has since surpassed his goals. I recently saw a pretty good update from him. He would do a monthly update. You can actually subscribe to his newsletter where he would talk about this and read all his previous updates. But he essentially said, hey, this is a great way to, grow my wealth, which he did. So he took his skill sets, acquired some businesses, scaled them, and I believe he's looking to sell them now. I could be wrong. I need to check in on him again. But again, just showing you all the different ways of how you can do this. And just to recap, you can build an empire like Syed. You can be an entrepreneur that just wants to acquire one business at a time, grow it, and then sell it. You can be like Joe, where you're, acquiring these small SaaS applications. You just need enough to show that customers are paying for it, and then you want to scale it from there. You can be looking at buying really large businesses. We work with all these types of entrepreneurs. Or maybe you're like y'all and you just want to, enter entrepreneurship through acquisition. You want to buy a handful of companies, grow a certain amount to, much more than that over a few years. All that is possible with acquisitions. And again, these are all real studies real case studies from acquire.com entrepreneurs. And we get to see it every single month. It's probably one of the most rewarding parts of my job. And that's the whole presentation. I have a little bit more time for some questions. So I'll pull those up now. And then, thanks, Roger. If you go in the chat right now, there's the thread from Joe. It's a great thread. And then also the course. Let me just showcase this right here. So how was this topic, everyone? What do you guys think? Was that helpful? So this course right here, if you have the time, it's a free course. What's cool about this course, and this is a true story, when I first launched Acquire, which was Micro Acquire at the time, I actually took this course and I thought it was so good, and it was like $500. And so we actually bought it as a company and we've just made it entirely free. So just go here, click checkout. It's entirely free. How to buy, grow, and sell startups. So it walks through the whole journey of what I just went over in a little more detail. I'm just giving the high level of why you should consider this, why I think it's a great path for entrepreneurs, why you should dive in to learn a little bit more. And that course really nails it on what to look for, how to grow the businesses, how to find engineers if you're not technical, some more of the nitty gritty. Okay, I'm going to go through a few questions. I'll spend maybe 10, 15 minutes here, and then we'll wrap it up. All right. First question, why do you think entrepreneurship through acquisition is gaining popularity? I think more than ever, people want to be their own boss. They don't want to work at jobs they hate. Acquisitions is a great way to step into entrepreneurship because, again, you get to skip over the riskiest part of entrepreneurship, in my opinion, which is that period where you're trying to figure out how do you make money? What does the product look like? How are we better than competition? What is our pricing? What is our company name? All of that is extremely difficult to put together because you have to do it all at the same time and you have to be correct. And typically a lot of businesses will start, they have a great idea, they'll go into the market with a product or service, and then they struggle to acquire customers. Maybe the product or service is incorrect. Maybe it's priced wrong. Maybe there's too much competition. It's such a challenging time in those first couple of years to just figure out how you're going to make money. Being able to skip over that right into the part where you can leverage some existing skill sets in sales or marketing or operations is extremely attractive. You probably aren't going to build the next Google with this approach. I hope that's a given, but you definitely are going to be able to build an awesome company that likely pays your bills, replaces whatever salary you have. Maybe you have a goal of building a private holding company and you can acquire multiple different companies. This is where you're able to do that. Okay, next question. How much capital do I need to acquire a startup, and what are some common financing options? Good question. To acquire a startup, you generally are going to need, I'd say, at least $20,000, $30,000, maybe $10,000 on the very low end. Just keep in mind, as the price will come down for certain businesses on Acquire, it's probably not going to have a lot of traction, meaning there's not going to be a lot of customers. The product may be not the best. So it's going to be a riskier venture as the price is lower because there's so much more left to prove out. If there's not a repeatable model, the product is incomplete. Yes, the price is going to be lower, but you may end up paying for that in different ways, whether that's with your time, your expertise, So there's different trade-offs. When you start to look at, maybe 100,000 or something like that, that's where you can look at a business that's generating, let's call it 20 or 30,000 in net profit. You have a good amount of customers. There's clearly a product there that customers are beginning to pay for. Maybe the product needs to be finished. Maybe customer acquisition hasn't quite been figured out, maybe a little bit. So there's a lot to work with there to give you an idea of the direction that you should head in. So that's probably where I would start personally. And then the financing options, you can use seller financing. We do have a third-party financing company. We're actually going to do a big announcement around that pretty soon. It's different from SBA financing, but I'm really excited about that. But if you have questions there, just feel free to reach out to our team and we can give you some more details. How do I know if I'm ready to acquire business? That's a good question. Very, very broad. How do I know if I'm ready to acquire business? I think you should know you're ready to acquire business if, one, you've at least mapped out what you're looking to acquire. You've mapped out how much you can potentially invest into a new business, not just for the acquisition, but also post-acquisition, in case there's any sort of changes or maybe just to acquire the business. Keep in mind, there's also going to be legal costs, your time. But I think also getting an understanding of what your goals are as an individual. Are you looking to enter entrepreneurship through acquisition? Are you looking to build an empire? What are you looking to accomplish by acquiring a business? I think getting those questions together is the first step. And once you have that, I think you should be ready. I should also add, definitely take that course I just pointed out. Learn as much as you can about acquisitions. Obviously, anything you do in entrepreneurship is typically very difficult, carries a lot of risk. So the more you can, educate yourself on things that can go wrong or mitigate any risks, the better off you're going to be. What should a beginner look for in a listing to ensure it's a good match? I think that's another good question. I think the first thing everyone should look at is really just the product. So this is going to require you to sign a non-disclosure agreement. This is going to require you to access the data room behind the listing. But by being able to access the product will give you a good understanding of what you're acquiring and what is the quality of the product. And by knowing that can give you a better understanding of why are customers using the product, what is the pain that it's solving, how can you potentially use or improve the product? Meaning as you go through it, is it really clear who the customer is, who it's for, how it's positioned? Is it really buggy? Are there certain things that just don't work? And so that can also give you a good idea of if this is something that's going to match your skill sets as well. Okay, how important is industry knowledge when acquiring a business? I would say, if you could pick, I don't see any downside to not acquiring a business in an industry that you understand. I think by doing this, you're able to just give yourself a leg up, but it's not required. It's definitely important, but it's not going to be a make or break situation because you can always learn. You can always learn from customers. You can learn from the owner. I don't think there's really any industry where you can't learn everything I think you need to know in a few months. But it definitely is a big advantage if you have, some experience. What I do think is most important is, when you look at how the business needs to grow, is there a plan in place to grow that? Meaning, do you understand just the basics of how marketing works or how engineering works? If not, is there someone available that you either work with or in the business that can, help these things, improve the product or help you access, different channels to acquire customers? I think those things are most important when looking to acquire a business. Okay, next question. What are the key differences between acquiring an online business versus a traditional brick and mortar business? Oh man, so an online business, I'm biased, but I think your life is going to be a lot easier. Traditional brick and mortar business, you're going to need to go into the business. You're going to need to, roll up your sleeves quite a bit. Let's say you're going to acquire a car wash or something like that. You're going to essentially need to know how to repair equipment. It's a very different business. Online businesses, everything's online. So you can do this from anywhere in the world. You can, work from your laptop. I think that alone is probably the biggest difference and the most key difference is just what your day-to-day is going to look like is very, very different. But they're both great businesses. I think at the end of the day, they're both profitable. They both have customers that you're serving. It also depends on, what you prefer as well. Do you prefer working on, a software business or an e-commerce business versus a traditional brick and mortar business. And then next question, how do you evaluate the profitability and sustainability of a startup you're considering acquiring? In terms of the profitability and sustainability, you're definitely going to want to go through the finances. If you're not confident in your ability to review, financial statements, or you just want a third-party opinion, we have a partnership in place for that as well. You can get something called a quality of earnings done, where they'll review the company's finances to essentially verify everything as they said it is. So definitely let us know if you need help with that. Someone's asking, what does the actual day-to-day look like? That's I don't know. I've never worked at a brick and mortar business, so I honestly cannot say. All right, we're gonna go through a few more questions, then we'll wrap it up here. When buying, tech stack architecture is included or only the front end? Both. You're getting the front end, so that's the website that you see as you're, signing up, marketing the business. That's the front end website, and then the back end tech stack, all that. The whole product is essentially what you're acquiring. Jan Wenda, can I expect access to code base to access code's quality? Generally, no, because when you do that, you're essentially giving the keys to a potential buyer, and it may not work out. So when you're going through a code review, generally what I've seen work best is you can access. You can go on Zoom together, view screens, and kind of have the owner walk you through. Another way to mitigate this risk, though, is having a post-acquisition support plan in place, meaning there's some form of the payment that's going to be held back once the deal closes, so you can access the code and go through everything. But generally, no, you're not going to have access to the server directly and be able to go through everything. Again, this is another area that I think third parties can help quite a bit during due diligence. All right, what kind of multiples are you seeing on net profit right now? I'm curious what transaction amounts are moving quickly. Good question. In terms of multiples, generally, 3 to 5, sometimes 6 times net profit is, the typical range that we see for these profitable online businesses. We do see lower, we do see higher from times, but generally that area is where we recommend because that's where we see the majority of the transactions taking place. If you go much higher than that, it's got to be an exceptional business. Otherwise, you're going to, scare away buyers, and we typically don't see transactions occurring there. In terms of the transactions amounts, we see, 3 buckets. One is probably on the lower end. Let's call it, sub 100K. That's, just a little bit of revenue, maybe upwards of 25,000. And that's a great business to potentially grow and buy and potentially sell later, or grow it to as far as you can take it. And then 100K to $1 million, that's probably my favorite range because there's a great product there. There's a good amount of customers. There's so much to learn from. And if you're good at scaling up businesses, that can easily turn into 2 or 3 or 4. I shouldn't say easily, but you can do it. I've seen it done numerous times. And then beyond that is 1 million and up. That goes up probably to 10 million, and that's when typical private equity will begin looking at these businesses. Hey Andrew, what's the typical size of businesses available to buy on your platform? Everything from 10K to 10 million. What are some creative ways to acquire a tech product if you do not have the cash? That's a tough one. I know online you'll see a lot about buy the business with no cash and 100% seller financing. I've seen it done like once. It's a terrible deal for sellers. We won't recommend it at Acquire. I'm just being honest. We will not. If we see an LOI that's 0% cash down, we'll say you should pass on that 10 out of 10 times. So in terms of creative ways to acquire business without cash, figure out a way to get some form of revenue or cash, or pass on it, because your opportunities as buyer will be so much better as well. So I highly recommend that. Can you explain how seller financing works, especially if I'm not based in the United States? So seller financing, essentially, you're making an agreement with the owner of the business to acquire the business. Let's say 50% cash and 50% seller financing. The purchase price is $1 million. So at close, you're going to give the owner $500,000 for their business. And then over a period of 1 month, 12 months, 24 months, you're going to agree to pay the seller financing over monthly payments, quarterly payments, yearly payments. And typically what you're doing is you're taking cash flow from the business to repay the seller each month. So it's essentially a loan that the seller says like, hey, you owe me $500,000, over 3-4 years or 12 months, whatever you guys agree to, with 10% interest rate. So you can acquire the business. All right. Well, that was fun. We're getting up on time here. Definitely appreciate all of you joining. Definitely check out acquire.com. We have a ton of different opportunities available for you today. And if you need help finding and growing your next venture, reach out to us. We have a experienced team of M&A advisors. We'd be happy to assist. I hope you enjoyed the webinar. We'll definitely be back in a couple of weeks with another topic similar to this. So stay tuned and happy holidays. Thanks, everybody.